Hello my fellow freedom builders, and welcome back to a quick video about earnings. Now the earnings season is starting, and as you might remember, I'm using daily FX, but you can use whatever of these calendars you choose. In here I go under calendars, choose earnings calendar here, and doing that we can see that we can get all the dates, the next 14 days, and we can, as always with news, choose how important we want, high, medium, low, all market caps, and so on and so forth, countries. I have just chosen mid and high importance and United States. That is where things are happening right now. And the video today is not as much about the earnings as it is how I would choose which of these stocks to invest in. Now, when I started to prepare for this today, the earnings hadn't come out. But as you can see, the Goldman Sachs here, they actually outperformed massively here, both on revenue and earnings per share. You can see Morgan Stanley, they were set to have some setback in the earnings. They had more than that, and we got an annual revenue, actual revenue that was higher than the forecast. I should say I haven't heard the guidance here, so they could be saying something about the future that will affect the price. We can see PNC also came out with quite a good beat of the forecast. However, of course, still lower than last time, but that is how it is. And then the last time I'm looking at, or the last one I'm looking at today is Untitled Brokers. Those are the four I have chosen. So when I started preparing for this, as I said, I didn't have the numbers here. So what you get here are my conclusions, and you should pretend that we haven't seen this, but these are actually some very good numbers. If you have followed my videos in the last weeks and months, I've said that I'm pretty sure the financial industry are going to do great. At least the financial institutions, banks, insurance companies, and so on, that can benefit from a higher interest rate, because the banks are just with a higher interest rate, they have a larger margin between borrowing money in from the customers and lending them out to other customers. So that thing about depositing and the loaning out to customers, that spread between the two can grow massively when the interest rate is high, and that is why I have been expecting banking shares to go up. Let's see if that happens. That can be a lot of things, but we are going into MyStockScanner, and I have made a watch list with Goldman Sachs, Untitled Brokers, Morgan Stanley, and PNC. And what I'm doing here is basically, and this is just to show you how I'm using the valuation chart. So if the earnings hadn't come out yet, and we haven't got them in our system yet, there'll be a day or two. But what I'm doing is I'm just looking out here at the annual and last 12 months price to earnings, and we can see that is somewhere in the 12, maybe up towards the 15, 17 area, because that is the last 12 months. So knowing that, I'm going into the valuation here, and we can see that there were a drop in earnings expected here. Then a growth in earnings, and then just to make it fair for all of them, I have put an earnings growth in the third year out, because I'm looking 3 years out here. I've put that in at 20% in earnings per share. We know that the price earning right now is in the 15-16 area. So with the 20% earnings growth in the third year, and this is actually only 2 years ahead, because we have one earnings report here just coming out today, one here and then one here, so that is 3 earnings, but basically just 2 years. With a 20% growth in earnings per share here in 2025, and the price earning, if that can stick around 16, that would leave us with about 58.3% in growth in the share price over the next couple of years for Goldman Sachs. Okay, that's one of them. Let's go on to Untitled Brokers. They have a price earning in the 4 to 5 area here, which is fairly low. So let's have a quick look here in the Untitled Brokers. Now they are expected to, or the analysts are expecting that to grow massively. So let's put a 20% growth rate in here as well. If the analysts are correct, there is a 46% growth rate, growth in the stock here. But if the price earning stays as low as it is now, we will actually see a drop in price. Maybe not this massively, but let's say the investors are willing to pay then 10 in price earning. Well, then we will actually see a drop in the numbers, in the stock price here, by somewhere between 10 and 20% over the next couple of years. So this is not a stock that is fairly well priced, if you ask me. Again, a million different variables can get in here, and there can be reasons why the analysts are predicting a higher price earning, because if we choose the price earning in the 16 to 18 range, well, then there will be a 48, around 50% growth in the share prices. But this is not the price earning the investors are willing to pay right now, and this is what I am working from in my little case here. Then we're going on to Morgan Stanley. They have a price earning in the 14-15 range right now. All right, let's again see the earnings estimates are these for 1 and 2 years out. We are putting 20% in year 3, and we are choosing this 15% range that we have right now, meaning that Morgan Stanley would yield us around 31% in the next couple of years. Last one is PNC, and as you can see, they have a price earning in the area around 10. It doesn't matter too much if it's 9.4 or 10.4. We just put around 10 in there. So the valuation here, we have the earnings estimates from the analyst. We are actually, even though this is a lot more than normally, I would probably put more like 0 in here when they are expecting growing earnings per share. But we are putting in 10 in price earning. And if they can have 20% growth in earnings per share, I'm not sure they can with these numbers, but if they can, they are basically a break even. So if I should choose between one of these 4 stocks to buy now and hold for a while and maybe sell some covered call option strategies on, we have 4 choices here. We have the Goldman Sachs with this very, very simple input, just the same earnings per share growth with every one of them. And I know you can't really do this because, of course, there will be differences. But Goldman Sachs, over the next couple of years, there would be a potential of around 58 to 60%. In the next one, Untitled Brokers, we were down somewhere between 10 and 20%. In the Morgan Stanley, we were up something like 31%, and the last one, PNC, was about a break even. So should I choose 1 or 2 of these stocks? If I only had to choose one, it would definitely be Goldman Sachs. If I should choose 2, it would be Goldman Sachs and Morgan Stanley. And again, there can be a million different variables or ways to look at a stock. So, of course, you should use your own methods and your own risk management and so on. This is just to show you how I use the valuation chart on a day-to-day basis when I invest, where I actually put in the expected growth. And again, that can be terribly wrong. So I put in the expected growth, the price earning that it seems like the investors are willing to pay, and then I try to make it a bit worse, so that if I look at Goldman Sachs and I say, okay, we have I put 20% in, but what if we did put 0% in here, and they had a price earning in the area of 15 to 16-ish here. So we are putting 0% in the last year here, and we are putting 15 in price earning. We might bump that down a bit even and say, okay, investors are only willing to pay 12 and there's no earning growth. Okay, then we will still have close to a break-even stock. Whereas if I do the same with Untitled Brokers or PNC, we would get a massive red number. So what I'm aiming for are stocks where I can take the analyst estimates, I can make them a lot worse, and I still have a fairly break-even trade. And then, of course, analysts can be wrong to the upside as well. So it could be that they grow their earnings by 50% here, and that investors are willing to pay 20 in price earning, and then there would be 150% upside in Goldman Sachs. Again, I don't know. Nobody knows that. So what we are looking at are estimates. Make the estimates worse and see if we still have a reasonable business case. that's all for now. I hope this was educational and inspirational. Take care of yourself and your money out there, and I'll talk to you again shortly, probably tomorrow, with a little video about Apple that actually might go down in price. That's all for now. Bye.